Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So, as you all know, today is Thursday. So, there's quite a lot that is happening and also a lot that happened yesterday. So, last night, the US Federal Reserve went for a 25 basis point hike, eventually pushing interest rates to 5%. So as a result, you can see the consequence in the markets. So if we begin with the dollar index, we can see that there was a sharp sell-off and a continued weakening of the dollar. So if you compare this with the other currency pairs, then it's pretty clear that they were all gaining against the dollar. The pound breaking this resistance and moving even higher. Same case for the New Zealand dollar, rising against the US dollar. The euro was also gaining against the dollar. Canadian dollar was also gaining against the dollar, though there's a very strong support here. So we are yet to see whether the CAD will break this level here. Then for JPY, you can see much weaker dollar against the yen, eventually finding support around this area. And now gold managed to do a very strong rise here. So from a level of around 1936, managed to rally all the way up to 1960, broke all the way up, went to 1978, and now it's attempting to push higher. So AUD-USD, same thing, attempting to push even higher against the dollar. Whereas if you look at US equities, they were on a losing streak. That's the S&P 500, the Dow Jones, and also the US Tech 100, or the NASDAQ were all losing. So as for Brent oil, managed to trade sideways. We didn't have much of a price action, and now it's retesting a key level that is on the resistance line. So you can see that this line has been holding as a resistance. So there is a good chance that price will either break or bounce. So we are yet to see the direction, but a nice bounce would be very nice to go for a short selling position back downwards. But then there's a likelihood that the market will break and push even higher, given the price action of the last 3 days. So today, we have two very important data points that are coming up. One, we have the Swiss interest rates and also the UK interest rates. So at exactly 11:30 a.m., we'll be looking at the SNB monetary policy statement, SNB policy rate, SNB press conference, and these will be discussing the decision that will be made here. So the market expects that the Swiss National Bank will raise interest rates by 50 basis points, eventually pushing them from 1% to 1.5%. So as for the UK, we'll be expecting the MPC official bank rate votes, monetary policy summary, official bank rate, and of course, later on in the US, we'll be looking at unemployment claims, as well as current account, new home sales, and natural gas storage. So towards the end of the day, we'll be looking at consumer confidence in the Eurozone, and also a speech from MPC member man from the UK. So the two important data points are the interest rate data from Switzerland and interest rate data from the UK. So this will be creating a lot of volatility in the Swiss franc, the UK pound, the FTSE 100, which is the benchmark index for the UK, and also we could be seeing some volatility in Brent oil prices. So that's what we're expecting for the day. So now that we know that the dollar is weak as a result of yesterday's news, then the pairs of interest now become the pound USD and USD CHF. So for pound USD, you can see it managed to cruise higher. So a strong rate hike, such as 50 basis points, would continue to push this currency pair higher. And perhaps we'll be seeing the market testing this extreme high that we last saw in January. So all the losses that the pound had made over the year are now being recovered. And if it manages to get to 1.24460, then the pound USD will be at a net positive for the year. So a very interesting concept. So perhaps we'll be seeing some further upside. And that is if the Bank of England comes out as very hawkish. So if it's dovish, then there's a good chance we could also see the market pulling back downwards. So the very, very short-term target would be just right here. And of course, during a rate announcement, we expect some higher volatility. So we could be seeing the market going for Monday's low. So Monday's low around this area also coincides with these previous resistance levels. So 1.21995 or basically 1.22 seems like a nice price target if the Bank of England appears to be very dovish. So the other key asset that I mentioned in this case is USD against the Swiss franc. Okay, let's get this from here. So we know that the Swiss National Bank has its own set of problems. All these problems arising from the purchase of credit suisse. And now you can see that for a while, the market was trading in what looks like a flag here. So if I zoom out, you can tell that the market went up, traded sideways for a while before breaking down to the lower side, retesting and pushing even down lower. And then today you can see there has been an attempt to push prices even lower before the candlestick of the last candles, the last hour. So here you can see an attempt to push back higher, but now the window is closing in and we'll be expecting another announcement from the SNB. So from the SNB announcement, if the CHF managed to weaken against the dollar, then we could be seeing the prices moving back up. But then if it happens to strengthen against the dollar, then the direction is downwards. And in this case, we will be targeting an area around the support level here. So 0.90706 seems like a nice target, and also 0.92428. And this is really dependent on what happens with the SNB, and it's happening in the next 20 minutes. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session. So checking to see if there is any questions. So the pairs against dollar overall bearish, yes. No, they are gaining against the dollar. The dollar is the one that is losing against these pairs, arising from the results of last night's meeting. So the argument is pretty simple. The Fed went for a 25 basis point hike. So with this basis point hike, it pushes US interest rates to 5%. So we have been following this path since March last year when interest rates were 0.25. But then the goal of raising these interest rates has been to reduce the Fed balance sheet. However, since the collapse of the Silicon Valley Bank, the Fed balance sheet has been expanding, and it expanded by around $300 billion within the last 2 weeks. And that's massive considering that the journey from March last year to today, the Fed had managed to reduce balance sheet by about $600 billion. So reversing the entire move by about 50% within 2 weeks is crazy. And also the new BTFP program by the Fed, which allows banks to borrow against their bonds at par, is becoming a big problem because now investors are pricing in new money. So the money that had been locked away in these at par bonds, this money would be available in the next 8 to 10 years. But now the Fed is allowing banks to access this money through the BTFP program, and they are borrowing at par. So if let's say you were to sell your bond at a loss of, let's say, 80 to 90 to 70 to 80% of the par value, now you can borrow against 100% of the par value from the BTFP program. And with these, it basically means new money are flowing in the system, money that was not expected to be in the system in the next 8 to 10 years. So with this happening, now investors are pricing in a weaker dollar, and we'll continue to see this going forward. So that's the case for a weaker dollar. So if these two currencies manage to strengthen today, the pound or the Swiss franc, then you know what to do. So thank you very much, guys, and I hope to see you on the next session.